Just as the U.S. is drawing down its strategic energy reserves, China decides to buy more from Russia. Coming up here in the Jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 7:46 here in the middle part of the country on Thursday. It is May 19th, 2022. Back from a little bit of a break. Here's your morning jog around the economic headlines of the world. Want to start off overseas with the People's Republic of China buying additional oil supplies from Russia. Of course, we've talked about it here on the jog for a number of weeks, probably even months now. The new world order when it comes to oil trade. You take oil from Russia, you move it over to China, it's there refined, and then you ship it to the west coast of the US and other places as clean Chinese diesel. Now China wants to buy even more crude from Russia. They want to do it on a long-term deal, probably lock in some of these sanctions-related discounts. One thing you want to keep in mind on a go-forward basis, it's really sort of difficult to actually transport that oil. Most Chinese oil is brought to China on what's called a VLCC carrier with 2 million barrels of oil. For Russian exporters, they really specialize in Aframax and Suezmax tankers that carry about 1 million barrels of oil. So there's actually kind of a engineering disconnect there. You have to sort of load it on Aframaxes, transfer it to VLCCs, or just sail Afra and Suezmax tankers the long route over to China. From a economic and strategic perspective, it does worry you, of course. Long term, China beefs up its oil reserves. Now they have additional supplies, days, if they want to attack Taiwan, that sort of thing, to bring additional pain to the global economy. Looks like we have a real alliance brewing in the East. Khols with a disastrous quarter. Retail's really getting beaten up here. You had Walmart, you have Target, now you have Kohl's. All with same store sales declines. Kohl's looks like they're going to be acquired. We're just waiting on bids to be finalized and executed. They're playing accounting games with the adjusted EBITDA. They're a mature company. They don't need to do that on a go-forward basis. Let me just see what that price ends up being and how retail reacts to M&A in the downtrend, right? When we do see companies go down a little bit, they normally get consolidated. I expect to see quite a bit of that in retail over the next 12, 18 months. Last but not least, speaking of M&A, Spirit rejecting JetBlue's offer. Now they're telling shareholders to reject the tender offer. Of course, right? If you're going to reject outright at $33, you're certainly not going to tell folks to vote for a $30 tender. Of course, Spirit trades at $18. A $30 tender would be like a 40% bonus, 60% bonus to Spirit shareholders. Take the money and run, right? Looks like a little bit of a squabble among leadership. Listen, if someone's giving you $1.60 on your assets, generally a good time to sell. If you want some additional info throughout the week, feel free to find me on the internet. I am out there. Till then, hope you and your family have a really good rest of your Thursday. I am out.